Hi, Josh Barker with Josh Barker Real Estate, and thank you for checking out our market update for the month of March 2023. Like what we like to do each month, let's go ahead and kick off this month's sales report by looking at our active sold report for the Shasta County Multiple Listing Service. So last month, in the month of February, and I'll circle this for you in red, there was 128 properties that closed escrow, which is down an eye-catching 42.9% compared to last year when we had actually closed 224 properties. Now again, a lot of this isn't big news to us because a lot of sellers are enjoying a really low interest rate on their home, and the incentive of going out and purchasing a new home with today's rates that are averaging in that 7% range is kind of putting a wet blanket on overall supply and demand in the market. So that's why we're seeing those sales volumes dropping like that. The next thing to look at is just our active inventory. Right now, I'll circle this for you in red. There's 593 properties that are currently for sale on the market right now compared to 516 last year. And so our inventories year over year are up almost 15%. However, if you look at how many homes came to the market in the month of February, I'll circle this for you in red, there was 206. If you go back 1 year ago in February, there was 345 that came to the market in the month of February. Again, kind of illustrating the point I just made a minute ago that right now with this higher interest rate environment, it's putting pressure on homeowners' desirability to want to sell their property, move up or move down. The next thing to look at is just talking about mortgage rates themselves, just to illustrate what's happening. If you look back right now on the people that refinanced when interest rates were at their rock bottom, it's reported that nearly 90% of all people that have a mortgage on their home, 90% have an interest rate at 5% or below. And half of them, 50% of those, are reported to have an interest rate of roughly at 3.5% or below. And so you can see when you compare to the interest rate of 7% today, compared to the lower interest rate that many of those consumers already have locked in, it makes that desirability to give that rate up to move to the next one to diminish a little bit. And that's what we're seeing right now with the overall slower supply and demand. The next thing to look at is just home builders. Home builders right now are beginning to kind of tap the brakes a little bit in terms of their development. Many of them are telling us that they're basically focused on just finishing the projects that they currently have, and that they're not really having any huge sweeping attempts to bring any major development. Now we have one large home builder here in town now, national home builder, and their prices are actually beginning to be reduced now. In fact, as of this morning, there was another major price change that came into that development. And this is really just showing that right now, because of demand slowing down, some of these builders are sitting on inventory that needs to get moved, and some buyers are looking at that as being the next place to be shopping for a home. So something to keep in mind. The next thing to look at is just the rental market overall. I've said this in previous videos, it still holds true today that the rental market is softening. Vacancy rates right now are averaging around 8%. If you go back a year ago, they were averaging around 4%. And so we're hearing more and more from landlords that they're reducing rents if they were too high in order to get the activity they need to get those properties rented out. So good news for those that are in the rental market, not such good news for those that are obviously investors in the market that are looking at rents as being the only investment piece. The next thing to look at is just what first-time home buyer impact is right now. Historically, nationally, it's been about 35% of purchases go to first-time home buyers. And then this last year, it dropped into that 25% range, and it's projected to be even lower than that this year because of the higher interest rates that we currently have. It's putting a big crunch on affordability. And some of these first-time home buyers are literally priced out of the market altogether at this moment with the higher rate environment. So all of these things are coming together to kind of show that the market right now, it's definitely a lot slower than it's been in the last few years. Probably not a surprise to many of you. The real question that we're getting at this moment is that timing-wise, what does the market look like? What's that forecast going forward? And what we can say is that right now there's still going to be some demand. We see buyers right now that are still in the market purchasing. I mean, think of it this way, either you're going to have to pay for a roof over your head whether you're renting it or whether you own it. And right now, many people feel like there's an incentive to own right now because if you had the choice between buying at the peak of the market of, let's say, a year and a half ago, or buying closer to the bottom of the market of today, which one makes more sense? And so as the old saying goes, you marry the house, but you only have to date the interest rate. So when rates go down, many folks will just refinance. They'll buy today, enjoy the fact that they can negotiate with a homeowner, perhaps get a better, not only a better price, but some better terms. And at the same time, they can refinance that interest rate of today in the future, assuming those rates go down. So In any case, if you have any other questions about the market here in Shasta County, just know we're always here to help. I want to thank all of you again for taking your time with us today. Have a great day.